What's going on, everybody? Thank you so much for checking in. In this video, we're going to go over SPY, which is the S&P 500 ETF, and we're also going to cover some other notable names on the market, such as Tesla, Apple, Amazon, AMD, Nvidia, and Meta. We're going to talk about these stocks on the macro, which is the daily time frame, and the micro time frame, which is the hourly time frame. That way we get an idea of what levels we need to watch on the macro and the micro pictures. So let's go ahead and get started, but before we talk about our charts, we have to talk about some things that happened last week and some things that are happening this week that may influence markets to push higher or even force them to pull back. First and foremost, the most important thing that happened last week was the release of the PCE report, which is the inflation index that the Federal Reserve pays close attention to. PCE report showed that inflation came down once again in January. The Fed's target PCE goal is 2%, so we are getting closer and closer to that 2%, which was good news for the market, and you can see that it reacted very positively after the release of that report. Last week, we also saw an update on the US GDP report, which showed that Q4 2023 grew at a rate of 3.2%. This is still positive growth, which challenges any recession argument. However, the fact that Q4 grew slower than Q3 is a bit of a concern because Q4 is generally the strongest quarter of the year. So we have to watch Q1 of 2024 very closely when those numbers come out. That way we get an idea of where our economy is trending and what direction we're going. Some things are happening this week, and the most important one we can note is going to be the US unemployment rate. Unemployment right now is reading at around 3.7%, which is a historic low. 3.7% is extremely impressive given the fact that interest rates are so high. The fact that our labor market has remained substantially strong is a great sign for our economy. And analysts are expecting that this Friday's unemployment report is going to remain right around 3.7. Historically or near historically, the markets have not really reacted too much to unemployment, but just make sure you keep that in mind going into this week. There is going to be a lot of focus on the unemployment reports. So now that we've talked about the economic front, let's move on to our charts and see what's happening and what we can expect our charts to do this week. First things first, before we jump into the hourly, we always like to start off with the macro time frame. So we've pulled up SPY here on the daily time frame where we can see that SPY last week closed at another all-time high. This is very impressive. This is the first time that the S&P 500 ever closes above 5,100, so this is very good news. When we look at the daily chart, we do see that the RSI is riding in a little bit of an overbought territory. However, we can see that there is still a substantial amount of buying volume going into all-time highs, and so for now, we are still very bullish on the market, but we are prepared for a pullback if it does come. First and foremost, the most important resistance that we have coming into this week is going to be that 513.30 mark where we got rejected on Friday. So we've placed a resistance here and we've labeled it all-time highs. Buyers are going to need a breakout above that level this week in order for them to continue. However, just keep in mind that the rally between 504 to 513 has been nearly vertical, and usually vertical rallies need pullbacks. You can see that it did so here before they can continue running. And so coming into this week, don't trust the first breakout above 513.30. Make sure there's a little bit of a cool down period, a consolidation period before buyers can get enough strain to push us higher. If we do pull back, we are still very bullish as long as we hold that 507.40 mark. If we break below 507.40, the next critical support we have is 504.40. And if we break below that point, we do not see much of a support, and we can potentially fill that gap very sharply towards 493 to 497. So just keep that in mind. There's a very strong unfilled gap that you're going to see here, and you're actually going to see the same gap across a lot of tech stocks. So just keep that in mind if you're trading any tech this week. We're going to talk about a bunch of tech stocks today that we're going to cover this gap on. So that's as far as SPY goes. Now, apart from the hourly time frame, which can be a little intimidating given the fact that there's not much support, you can always go to SPY's daily and you can look at the 10 and 20-day moving averages. If you don't have these two lines on your chart, you need to place them. These are the 10 and 20 simple day moving averages, and they're so important because we can see that as far back as we can go into this rally, they have been the support system for us, and every time we've retested them, the market has bounced back higher. You can see an example here, 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 and here. So going into this week, If we do pull back and we break below 504.40, that would place us below the 10-day moving average, and you can start looking at the daily and see where the stock's daily candle is trading in comparison to the 10 and 20-day moving averages. As long as it is above them, then we are strongly bullish. The moment it breaks below them, that means sellers may be controlling the average 10 or 20-day trend. The next stock on our watch list is going to be Tesla, which is trading above its 10 and 20-day moving averages, but you can see that its buyers are having a little bit of trouble blasting off of those two moving averages. Yes, it is still holding on to them for dear life. It is holding on to them for support. You can see that it comes down to them and it bounces above them. It has done so multiple times in the last 2 weeks. So we need to look at Tesla and we need to look at it from a micro perspective. Now that we know that on the macro, it is trying its best above the 10 and 20. Let's see what it's doing on the shorter term time frame. And you can see that on the shorter term time frame, Tesla has been stuck between this 198 to 206.75 range. So buyers are still looking for a breakout above 206.75. If they do get that breakout, then they have a chance at pushing Tesla towards its next price target, which is going to be between 210 and 213. To the downside, if buyers are not strong enough to hold Tesla, that will force a break below 198. And if Tesla is below 198, then it's also below its 10-day moving average. And then we can expect a downside move towards 190. The next stock on our watch list is going to be Apple, which has been one of the weakest stocks on the market, ironically, because Apple is usually so strong. But to our surprise, Apple is actually very, very weak this quarter, and that's probably because of their slowing sales, and it's looking like their Apple Vision Pro product is not hitting as much as they thought that it would. So with that being said, we can see that Apple is trading below all of its healthy moving averages. That's unlike most other stocks on the market. Most other stocks are trading above those moving averages. That's the 10, 20, 50, 100, and 200. The 100 and 200 day moving averages are the longest running moving averages, so they're always going to act as the strongest moving averages. So when a stock is trading above them, they are acting as a strong support system. If a stock is trading below them, they are acting as a strong resistance. And you can actually see an example of where Apple tried to get back above its 100-day moving average here, and it got rejected very strongly and it got sent lower. So you may see that Apple's downside movement is very choppy, and that's very normal because Apple is still a very sought after company. And so you're not going to often see very strong downside movement unless there's some kind of news catalyst that pushes it down. However, most of the time, every dip tends to get bought on Apple, but nonetheless, the general trend on it right now is leaning more bearish. With that being said, here are some levels that we're watching for Apple coming into this week. First and foremost, we had a support at 179 for Apple last week, but you can see that it broke below it, came down to 177.38 before it bounced. So that makes 177.38 our most critical support coming into today. Coming into this week rather. If Apple breaks below 177.38, then our next downside target is going to be right around 173. And below 173, we don't really see much support till around 165, which is where Apple bounced back in November. You can see that it had a very strong bounce back in November. And so that is where our next support is if Apple cannot hold that 173.30 mark. If you are bullish on Apple, Apple needs to get back above all of its healthy moving averages. These are the 10, 20, 50, 100, and 200-day moving averages. And it also needs to get back above 186 for buyers to take any sort of control. Right now, we are not bullish on Apple in the short term. Long term, of course, we are still very bullish on the stock. We think that the company is still very valuable. It has a lot to give. But the very short term, investors seem to be focusing more on semiconductors, which we'll talk about in just a little bit. The next stock on our watch list is going to be Amazon, which has slowly crept its way into another 52-week high. Amazon has been slowly moving, but nonetheless, it has been moving in a very positive way. You can see once again how that 10 and 20-day moving averages are holding such a strong hold on Amazon. You can see that Amazon came down to its 20-day moving average here. It gained enough support to push back above it. Once again, comes down to the 10 here, gains enough strength to move back above it. So you, as a trader on the daily chart every day, you should be looking at the beginning and at the end of every day to see where did that daily candle close in relation to that 10 and 20-day moving averages. If you're looking at the shorter term charts for Amazon, here are some levels to focus on. First things first, we have a resistance on Amazon at 180. Now that it's broken above 175, we have a resistance at 180, and this entire move up becomes our support. So we can place a support at 176. We need Amazon to maintain that 176 support in order for it to maintain the breakout. The reason we got that 176 is because you can see that Amazon got rejected at 176 here, it got rejected at 176 here, and then it finally broke above on Friday. You can see that on this breakout, it came down, retested 176, and continued pushing higher. So for buyers to remain most confident on Amazon, it needs to hold above 176 going into this week. And the next resistance we have in focus is 180. Above 180, we do expect Amazon to continue pushing, and we have our next resistance right around 183.86. So we can safely place a resistance at 183.85, and that would be our next price target above 180 for Amazon. So we have that in place. Let's go ahead and remove this 180. The next stock on our watch list is going to be an AMD. So now we're getting into the semiconductors. AMD, obviously a very phenomenal week. They had 334 million in volume traded last week, and you can see that it reached another new all-time high, finally breaking above that 200 mark. We actually managed to cover about 400% on our AMD calls that we played last week. So it was a very phenomenal week for us, for AMD and our group. So if you are looking at AMD on the daily, you can see that AMD obviously spent about 3 to 5 weeks maybe consolidating between that 160 to 185 mark. You can see a lot of ups and downs, lots of ups and downs. But the longer the stock takes in consolidating or cooling down, the more significant that breakout becomes when it finally happens. And you can see that clearly happened this week. AMD consolidated for a couple months, buyers finally got enough strength, and that breakout was very substantial, taking them from 175 all the way to 202 in a matter of 2 days. So if you are looking at AMD, here are some levels to focus on this week. We are strongly bullish on AMD as long as it holds that 183.60 breakout. Yes, that support is not very close. However, that still remains the primary support and focus, because as long as AMD is above these highs right here, it can come back down to them to retest them and still be bullish before it continues higher. So if AMD needs to pull back all the way to 183.60, we would still remain bullish on the stock. This is not a name that we would bet against, at least not overnight. Maybe for a day trade, you can quickly trade it as a short or a downside move. But generally speaking, you want to remain bullish on this stock. So the main resistance is going to be 203.30, and that the only reason that that's a resistance is because that's the highest point that AMD has reached. So we have that as a resistance. So if AMD opens below it on Monday or this week, then we can use that as our breakout points. To the downside, we have a support at 192.50 and another at 183.60. We would not turn bearish on this stock unless it moves below 171.85. The next stock on our watch list is going to be Nvidia. Nvidia has been one of the best stocks on our setup so far. Let's go ahead and show you guys. Nvidia has just been phenomenal to us. This is just one of those stocks that just keeps on giving. We've actually been trading this stock since it's been trading at 470, and it's getting closer and closer to that 1,000 target that we got back in November of last year, and it's still paying us. If you are looking at Nvidia this week, here are some levels to focus on. First things first, you have a resistance to focus on at 827.80. Nvidia needs to break above that level in order for it to continue its rally. To the downside, we have a support at 770 and another in 742. As long as it holds that 742 mark, we are still very, very bullish on Nvidia. If it breaks below, however, we do see an unfilled gap all the way to 676. If that happens, then the entire market is likely to be selling off, because Nvidia is one of the strongest companies on the market right now. The next and final stock on our watch list is going to be Meta. We have also been very bullish on Meta. If you caught any of our videos recently, we have been saying that Meta is destined to move above 500, and lo and behold, Meta moved above 500 last week. So with that being said, the main resistance we have to focus on this week is going to be Meta's 504.25. That resistance marks their all-time high. Above that level, they can continue that push. Unfortunately, there are no resistances in the past at that level, which means that we have to gauge our next price target accordingly to volume and momentum, which we will do so with our group, and we will give you guys an update the next video we upload, so make sure you check back in. To the downside, Meta has supports at 488.35 and another at 476. A break below that point would just send them back into their consolidation. We would still not be bearish on Meta Unless it breaks below 438, then we would be ready for a gap fill down. So that's all we have for you folks. I hope you guys enjoyed this video and got a lot out of it. Make sure you subscribe and like.